Assalamualaikum warahmatullahi wabarakatuh. We are from Group 7 for ECON 1610, Section 6 and 7. We'd like to present our topic, which is tax system. My name is Alya Batrisyia Binti Shamshul Ariffin, and my metric number is 2110736. I will provide an introduction of tax system, which will include the definition, the characteristics, and the importance of tax system. First of all, what is tax and tax system? Tax is a compulsory contribution to state revenue levied by the government on workers' income and business profits, or added to the cost of some goods, services, and transactions. Tax system is a set of taxes enforced in a country at a given time. As we all know, there are a lot of different types of taxes, like income tax and corporate tax, which we will look into after this. And all these types of taxes imposed in the country is what we call as the tax system. Now, what are the characteristics of taxes? First of all, it is an enforced contribution. This means that tax payment is not voluntary in nature and there is no element of consent. And those who avoid paying taxes using illegal methods, or what we call as tax evasion, will be punished by the law. Secondly, it is payable in the form of money. Tax should be paid to the government in money due to its liquidity. The government will need the cash for its operation and to finance public projects. Next, it is proportionate in character. Payment of taxes must be based on the ability to pay principle. This means that the higher the income of the taxpayer, the bigger the amount of tax they will have to pay. And the lower the income of the taxpayer, the smaller the amount of tax they will have to pay. Next, it is levied by the state. In Malaysia, the Inland Revenue Board of Malaysia, IRBM, acts as the agent of the government, are responsible to provide services in administering, assessing, collecting, and enforcing payment of taxes. Taxes is also levied for public purposes. Revenues derived from taxes cannot be used for purely private purposes or for the exclusive benefit of private persons. It must be used for the public's welfare, such as to provide health and education to the public. Lastly, it is paid at regular periods or intervals. Now, why do we have to pay taxes? Is it important? One of the importance of taxes is redistribution of income. Taxes are used to reduce income inequalities. As I have explained earlier, taxes are paid based on the ability to pay principle. The rich are taxed higher amount compared to the poor. This will influence the allocation of resource through transferring resources from the private sector to the government to finance public investment programs. Taxes are also used to raise government's revenue. The government collects taxes and use it to finance social projects and meet the public demands. This includes to cover the cost of administrative services provided by the state to the public. Next, it is used to discourage harmful activities. The government imposes higher taxes on harmful products and activities to raise the costs and discourage people from buying or selling them. Examples of these harmful products and activities are liquor, tobacco, and also gambling. Next, it is used for social infrastructure. Taxes collected by the government will be channeled to build or improve social infrastructures for the public, such as roads, hospitals, school, public services, transport, and also housing. Taxes are also important for economic development. Taxes contribute to the country's GDP and help encourage economic growth, which will raise the standard of living and increase job creation. Last but not least, it is important for public welfare. Taxes collected is channeled to funding, maintaining, and improving the country's health and education system. Besides, it is also used to fund important sectors such as security, scientific research, and environmental protection for the public's well-being. Furthermore, taxes collected are also used to finance social projects like pensions, unemployment benefits, and childcare. Therefore, it is clear that without these taxes collected by the government, it will be difficult for them to raise money to fund all these projects. Hence, we as the citizens must understand and pay taxes as it has a significant role to the public and to the country.
Assalamualaikum warahmatullahi wabarakatuh. My name is Puteri Nur Najihah and my matric number is 2110850. So today I'm going to explain about the types of taxes. In the literature of public finance, taxes have been classified in various ways according to who pays for them, who bears the ultimate burden of them, the extent to which the burden can be shifted, and various other criteria. As you can see, there are two types of taxes, which are direct and indirect taxes. However, there is much disagreement among economists as to the criteria for distinguishing between direct and indirect taxes, and it is unclear into which category certain taxes fall into. So, direct tax is a tax that levied on income and profit, and the burden of the tax cannot be shifted to other person. It has to be paid directly by the person concerned. The tax is paid after the income reaches in the hand of the taxpayers, and they are typically based on the taxpayer's ability to pay as measured by income, consumption, or net wealth. The second one, indirect tax, is a tax that levied on goods and services. The burden of the tax can be shifted to other person as the tax is paid by one person, but he can recover from another person, and the tax is paid before the goods or services reach the taxpayers. Here are some of examples for direct tax. The first one is income tax, and the next one is corporate tax. So, what is income tax? Income tax is a tax that government imposes on income generated by businesses and individuals within their jurisdiction. The central governments collect this tax as mandated in the Income Tax Act 1961. This tax is used to fund the public services and to pay government obligations and then to provide goods for citizens. Some types of income tax are individual and business income tax. Individual income tax is also referred as personal income tax. This tax is levied on individuals' wages, salaries, as well as other types of income. They are also commonly adjusted to take into account the circumstances influencing the ability to pay, such as family status, number and age of children, and financial burdens resulting from illness. The taxes are often levied at graduated rates, meaning that the rates rise as income rises. Personal exemption for the taxpayers and family can create a range of income that is subject to a tax rate of 0. So, business income tax is a tax that levied on the profit of the company, and how the tax is paid is depend upon the form of the business. The next example for income tax is corporate tax. Corporate tax is a tax on the profits of a corporation. The government collects this tax as a source of income. The taxes are based on taxable income after all expenses have been deducted. The examples for indirect taxes are sales tax and goods and services tax, which more well known as GST. What is sales tax? It is a tax paid to a governing body for the sales of particular goods and services that is usually calculated as percentage of the purchase price and collected by the seller. There are two stages for taxes can be collected: single stage and multi-stage. Single stage taxes can be collected at the retail level, as the US states do, or they can be collected at the pre-retail level, as occurs in some developing countries. Multi-stage taxes are applied at each stage in the production distribution process. GST is a value-added tax on goods and services sold domestically for consumption. This tax is included in the final price and paid by the consumers at point of sale, and the reseller pays it to the government.
Bismillahirrahmanirrahim. Assalamualaikum and good day. So I will talk about the comparison of tax in certain organization Islamic countries, or we call it OIC. So the first thing is why some countries have high tax rate. So the taxation is the only practical means of raising the revenue by a country to finance government spending on the goods and services that most of us demand. For example, that we as a citizen, we demand public transport, we demand universities, school open in a certain area. So the government need money to build this project or this mega project like the MRT and so on. So by the tax, the government will gain the money, and we pay for the tax in IRB, the International Revenue Board. And also the government also need to pay for the pensioners using the money. So for the comparison of personal income tax in certain organization Islamic countries, this one is average income year assessment starting 2020. The average income for Malaysia is 24,744 ringgit, and we need to pay 3% to the IRB, Inland Revenue Board. And the average income in Turkey is 93,960 lira, which is they need to pay 27%. The average income in Indonesia is 28,240,000 Indonesian rupiah. They need to pay 15% tax rate. In Pakistan, average income 981,600 Pakistan rupee. They need to pay only 5%. And last but not least, in Jordan, the average income for their citizen is 26,555, which means they need to pay 25% tax rate to their government. So this is the graph, and we can see that Turkey is the highest tax rate, okay, compared to the other countries. Like Malaysia is the lowest, following Pakistan, and then Indonesia. And Jordan is the second highest tax rate based on these 5 countries. And how to know the personal tax rates based on the table? So if you can see, the 20,000 to 35,000, the average income for Malaysia, and we can see the tax on excess is 3%. So if you are richer and you get 1 million ringgit Malaysia per year for your income, so for the 1 million, we can see you will pay 28%. So the higher your income, the higher the tax you need to pay. We move on to the comparison of corporate tax in certain organization Islamic countries. And firstly, we start with Turkey. According to the latest issue of the official gazette, the corporate tax rate, okay, which is currently, this is in 2019, is 20% in Turkey, and then increased to 25% for 2021 and 23% for 2022. This one for corporate incomes. And then for corporate tax in Malaysia, we can see the standard corporate income tax in Malaysia is only 24%. But then there is some circumstances that we need to understand. We need to know the type of the company. If the resident company with a paid-up capital 2.5 million ringgit or less and gross income from business is not more than 50 million, they need to pay 70% on the first 600,000 and 24% in excess of the 600,000, following the 2 types that need to pay at the same tax rate. Like the resident company that does not control directly or indirectly another company that has paid up capital of more than 2.5 million, and resident company that is not controlled directly or indirectly by another company that has paid up capital more than 2.5 million. And for the non-resident company, which means that for the overseas, okay, they need to pay fixed amount, 24% of the tax rate. For the corporate tax in Pakistan, we can see from 35% in 2020, it decreased to 29% in 2021. Okay, for the information, in Pakistan, the corporate income rate tax collected from companies, its amount is based on the net income companies obtained while exercising their business activity, normally during the business year. The benchmark we use refer to the highest rate for corporate income. Revenues from corporate tax rate are an important source of income for the government of the Pakistan. Next, for the corporate tax in Jordan. For the corporate tax in Jordan, they have a specific rate for a different sector. For example, bank, 35% for the corporate income tax rate. Electricity distribution and generation company, 24%. Basic material mining company, 24%, and so on. Okay, Jordan, they have a specific sectors, different rate for the corporate income tax rate. Last but not least, in Indonesia, our neighbor country, the corporate income tax and tax rate, in general, the corporate income tax rate is 25% applies in Indonesia. However, there are several exemptions. First thing, the company listed on the Indonesia Stock Exchange IDX that offer at least 40% of their total share capital to the public obtain a 5% tax cut. Okay, 25% minus 5, it means that they need to pay only 20%. The small and medium enterprise is number 2, SME, with an annual turnover below 50 billion Indonesian rupiah, approximately about 3.8 million US dollar. They obtain a 50% tax discount imposed proportionally on taxable income of the part of gross turnover to 4.8 billion Indonesian rupiah. Okay, they cut 50% from 20% and then 12.5%. And then lastly, in 2013, Indonesia Finance Ministry issued a regulation that set a 1% income tax tariff on individual and institutional taxpayer with an annual gross turnover below 4.8 Indonesian rupiah, that approximately about 363,000 US dollar.
My name is Anisa Syahmina binti Ahmad Sultan. My metric number is 2115484, and I'll be presenting on the issues related to tax. There are many issues in tax due to each country having their own tax system with their own loopholes. But here, I'll only be presenting about 2 issues, which is tax evasion and double taxation. The first issue is tax evasion. Tax evasion is an activity in which a person or an entity deliberately uses illegal means to avoid paying taxes. Tax evasion has a negative impact on the economy, such as depriving the government of the money needed to carry out laws and initiative which would eventually reduce the effectiveness of the government. It also increases budget deficits. Tax evasion is also a danger to the community as it causes significant loss of revenue that could be used for funding improvements in health, education, and other government programs. Every citizen of a country is subjected to pay the tax imposed upon them by the authority. However, taxpayers may be reluctant to pay the required amount of tax. There are many factors that influence taxpayers to engage in tax evasion. One of them is tax knowledge. It is known that when a taxpayer is not well informed about the importance of tax for a country's development, they will be inclined to engage in tax evasion. Another factor that influences tax evasion is tax fairness. When there is a lack of understanding about tax, taxpayers tend to feel as if the tax imposed upon them is unfair, as they do not receive any direct benefits from it. This will lead to taxpayers not fulfilling their duty to pay the tax required of them. One of the most recent cases of tax evasion in Malaysia was in early 2021 when the High Court ordered associates of Low Tek Jo or Jolo from the 1MDB case, Casey Tang Keng Chi and Jasmine Lu Ai Swan, to pay 6.7 million ringgit and 2.4 million ringgit, respectively, for tax evasion over several years. The next issue related to tax is double taxation. Double taxation refers to income tax being paid twice on the same source of income. It occurs when the income is taxed at both the corporate level and at personal level. Double taxation also refers to the same income being taxed by 2 different countries. International businesses are often faced with issues of double taxation. Income may be taxed in the country when it is earned and then taxed again when it is repatriated in the business's home country. In some cases, the total tax rate is so high it makes international business too expensive to pursue. As a result, Double Tax Agreement (DTA) was established to resolve the issue of double taxation. DTA is essentially a settlement between two governments to avoid double taxation. This allows both trading countries to become more interdependent economically and socially. This agreement serves to facilitate the international flow of investments, trades, and financial activities between the countries involved. If a taxpayer fulfills the tax resident requirement of both countries consisting of the DTA, the individual will be regarded as a tax resident of the country he resides in. In Malaysia, double tax agreements generally apply to the taxes of both the taxpayers of Malaysia and the other country involved. These taxes are related to the taxpayer's total income or elements of income. The types of taxes that are covered by the double tax agreement is income tax and petroleum income tax. In specific cases, there are other taxes apart from personal income tax to which provisions of Malaysia's DTAs apply. Some of these taxes include corporate tax and capital gains tax. As of 2021, there are 75 countries that have signed the double tax agreement with Malaysia, such as Canada, United States, United Kingdom, China, Japan, Korea, and many more other countries. However, there are still countries that have not yet signed the double tax agreement with Malaysia, such as Brazil, Greece, Iceland, Maldives, and many others. As a result, citizens will still have to pay the taxes imposed on his or her income in the country of residence, which is Malaysia, as well as in the country of origin of the income. That is all from me. Thank you.
Moving forward to our last discussion about tax system is the effects of taxation. What it means by the effects of taxation. Effects mean the changes in the economy generated by the tax system and its variations. According to Dalton, the best system of taxation from the economic point of view is that which has the best or least bad economic effects. Dalton discussed the economic effects of taxation under three heads, which is effects of taxation on production, effects of taxation on income distribution, and other effects of taxation. And such effects on productions are analyzed under three heads, which is effects on the ability to work, save and invest, effects on the will to work, save and invest, and effects on the allocation of resources. While such are the effects of taxation are analyzed under two heads, which is effects on employment and effects on inflation. Now let's take a look on the effects on the ability to work, save and invest. To work, when taxes are imposed, it affects so much the ability to work, especially from low income group, because taxes reduce the disposable income of the taxpayers. When the disposable income of these people reduce, the buying capacity and the ability to consume also will reduce. Why? Because low income people do not have enough money to buy basic necessities such as food and beverages, since a part of their income has been taken away to pay taxes. And this will cause the standard of living starts to decline slowly, and as a result, the efficiency and the ability to work is adversely affected for poor people. However, taxes does not affect critically on the ability to work for high income group because they do not have to worry and still have enough money to buy basic necessities even though a part of their income has been taken away to pay taxes. They are forced to reduce their expenditure on luxury goods only, which clearly does not affect the efficiency and the ability to work for rich people. Now let's take a look at the effects on the ability to save and invest. To save, The ability to save depends on the disposable income of the taxpayers. As you can see here, when disposable income of the taxpayers decrease, savings will automatically decrease too. And when disposable income of the taxpayer increase, saving will automatically increase too. But since we are talking about the effects of taxation, so we are more likely to focus on the decrease of the income and saving. To invest. The ability to invest depends on the savings of the taxpayers. When taxes are imposed, the ability to save is reduced, so there will be less saving resources that are available for investment in capital formation, such as investment in shares, stocks, and many more. For long term, it will lead to low productivity and low income, causing a further reduction on the ability of people to save. And we also know that lower rate of investment decreases the economic growth of a country. So what can I conclude here is, when the disposable income of the taxpayers reduce, saving will reduce and better investment cannot be made because the income remaining after deduction of taxes are not enough. Now let's take a look on the effects of taxation on the willingness to work, save and invest. So the effects of taxation on the willingness to work, save and invest depends on the nature of tax and psychological reaction by taxpayers. Let us take a look at the nature of tax first. A tax system contains different nature of tax in its structure. Different nature of tax has distinct effects on the incentive to work and save. As you can see here, some taxes have least effect on the willingness to work and save. Some have neutral effect, while some taxes are proved to be very adversely affected. For example, community taxes such as excise duties and sales tax have least effect on the willingness to work and save because only small proportion of taxpayers' marginal income is spent on the goods subject to these taxes. For tax on monopoly profit, it has neutral effect as monopolies adjust its production in such a way at the point of equality between marginal revenue and marginal cost, causing maximum monopoly profit is yielded. However, cumulative tax such as GST has adverse effect because large proportion of taxpayers' marginal income is spent on goods such as tobacco, alcohol, entertainment, and this will cause disincentive effects on savings. Now let's move on to the psychological reaction by taxpayers. When taxes are imposed and it expected to be continued forever, it will reduce the willingness to work, save and invest of the taxpayers. Why? Because they have a feeling that every tax is a burden and they feel that it is not worth it taking extra responsibility and start to alter their preference from that of work to leisure, because so much of their extra income will be taken away by the government in the form of taxes at the end of the month. Thus, the psychological state of mind of the taxpayers has a disincentive effect on the willingness to work, or can be known as an announcement effect. However, the effect of taxes upon the willingness to work, save and invest depends on the income elasticity of demand of the taxpayers. For taxpayers who have elastic demand for income, it encourages them to work, save and invest more so that the lost income is at least partially recovered, while for taxpayers who have inelastic demand of income, they will be affected adversely. The allocation effects is typically used by government to discourage the production, consumption or exchange of particular goods or services that are deemed undesirable, such as production of tobacco, alcoholic drinks and opium businesses. When such allocative effects takes place, The resources from the high-tax industries will divert to the low-tax industries, which are useful for economic growth. When high taxes are imposed on these harmful goods, it will curb their production and consumption, because taxpayers would rather not pay taxes, as taxes create this incentive to produce, consume, and exchange for these products. Taxpayers seems like to realize that the surplus resources will then be made available for efficient and optimum use of scarce resources. For example, when taxes are imposed, taxpayer has to pay a high land value to the landowner, and high income tax reduce the incentive to supply labor and influence the decision about whether it is beneficial for taxpayer to enhance their human capital in education, training, skills, and many more. Thus, taxation influences the volume or size of production as well as the pattern of production in the company, so that the production of luxuries may be curbed and necessaries may be improved. The effects of taxation on income distribution depends on tax rates and kinds of taxes. Tax can be classified as progressive tax, regressive tax, and proportional tax. Progressive tax is a tax that takes a large percentage of income from high income group than low income group, and it reduces the inequality. Meanwhile, regressive tax is a tax that takes large percentage of income from low income group than high income group, and it increases the inequality. What it means by income inequality here is a tax will be imposed to the high income group by leveling down their income and wealth. And taxation will divert the wealth of the rich by funding the program of public expenditure, which will be beneficial to the entire community, especially the low income group. In other words, a rich person having a great ability to pay is taxed at a higher rate, and the poor is exempted or taxed at a lower rate, so that the gap in inequalities in income and wealth will be shared equally by all sections. Lastly, proportional tax is a tax that takes same percentage of income from all income of groups. And lastly are the effects of taxation. Imposition of taxes affect the employment and inflation of the country. For example, the higher the tax, the stronger the disincentive to work. Why? Because tax burden discourage employers from hiring, and they reduce the incentive for the unemployed to seek for a job, and for those in employment to work longer and harder. Moreover, taxation reduces the purchasing power of the people, and it reduces their consumption. Why? Because the increase in price of goods and services reduce the consumption and demand on consumer goods like foods, beverages, clothing, gasoline, and many more.